The next bar confirms it. So we're always looking to read the indicator dialog boxes. Okay, it's down, it's closing near the lows. So now I know at that level there's weakness. Now here was a no demand bar. Okay, and you can see, well, it's actually, that is not clear no demand actually. That is, the volume's a bit too high, but it still put a signal on there saying that weakness is appearing. And that's because, well, what do you all notice about the spread of that bar and the spread of that bar? What do you all notice about the difference in the spread? What do you notice about the range of that bar? Okay, that's quite important. If it was on low volume, that's one thing. Yeah, it's narrow. Okay, so that's important in its own right. And the next bar actually confirms it. Now you don't see that signal very often. Market hasn't really reacted to it though. It's just drifted down, which is a bit concerning. But once it takes out the 64, I'll be looking for a retest of this level. So this won't be this will be a scalp trade, if anything. So it's saying here we want to look to the future. It's an up bar. The volume is high. It's closed off the high of the bar. You can see that the volume is not less than the previous two bars, which is why it's not no demand. It says pay more attention to this indicator if you have weakness in the background. Well, we definitely have that. Look to the following bars for confirmation. It's asking to look for no demand bars. Okay. Now, at this moment in time, this is the first test where the market was held. So that's the level where I think they're going to test it. And someone said, what's the significance of that? Because it closed at 59564 on this test and then held. If it breaks that, okay, so if we test it again and it breaks the low of that bar, then this will go lower. Absolutely no doubt about it. So if it gets down to 9562, which is the low, which is not really doing anything much at the moment. If it does that, we should see a nice run. So just bear with me a second. Sorry about that. That was my daughter just disturbed me for a second. So yeah, so we can see here that when you've got weakness appearing like this, it's not doing much to it yet. But if it gets to below 9562, if it does that, then I'm looking for a very quick move down into this area here, which is where the market previously held up. Let me just see if Tom's back. I don't know if he is. Tom, are you back? Just see if he's managed to.
Yeah, hi, we're all back.
Good. All right. I'm just talking about this this short here. I'm short on the pound again.
Yeah, we are watching
on the Canadian. Yeah. So and I'm looking, Peter, for it to take out this test. And if it takes out the low of that bar, I'm at break even. I'm not going to lose any money on the trade because it's not really moving. But if it does move, I'm looking for that gotcha bar that just takes off, takes out the test, and comes back down to this area here where my profit target is. So we'll see what happens. It's whatever happens, I'm not going to lose on this trade. And the pound trade is now back at break even again. So now on that trade, I'll talk more about it at 6 o'clock. That's working nicely as well. Just, I don't know if you saw, Peter, if you were out of the room, but I said to Tom to take a look at the British pound 15-minute chart. If you want a great example of no demand bars,
we'll do that.
Possible one. Yeah, there it is. It's in the right place. It's in a downtrend. That's where I got back short. I closed my position on here, got back in here, and now we're looking to take out, and the target now is to break the 1.5900 level, and we'll see how that works. All right, everyone, back to Tom.
Cheers, Gavin. Right, folks, just going to take control of the screen here for Tom. Sorry about the trouble earlier. So, Tom, do you want to look at the 15-minute pound? Oh, and pot. We do pot. Let's do pot first. Hang on, as Ellenie's been waiting. Hang on a sec. Right, so what? Yeah, so pot. So this is another stock, Tom, that Ellenie's asking you to look at. It's a stock called POT, P-O-T. I think it's something to do with potash.
Well, I look at that, immediately two things hit me. First of all, it's actually weak in the index. Secondly, there's an attempted shakeout here. And look at the supply on the bar. Here. That's a shakeout in anybody's language. And the supply is horrendous, look. And it's gapped down as well. And you've got a sign of weakness back here. And it's acting weak in the index. I would not be interested in this at all. If you want my opinion on it. Right. It may possibly go up a little bit. But you have to let it unfold and read. But there's far, far too much supply here, look, to be bullish. That is a horrendous amount of supply present. It's acting weak in the index, look. In other words, it's making that level here, but on the index it's up here. So that's a no-no as far as I'm concerned. Put up a, say, 7-minute, Peter, would you? S&P. You can read any of these time frames, more or less, look. That's 7 minutes, is it? Yeah. Right. There's a lot of no demand there, look. These blue bars are up bars, as you know. And look at the low volume. There is no serious professional interest. Now don't forget that they can mark these markets up or down more or less at will, or at least when the opportunity arrives. I describe it as an auctioneer in an auctioneer room, right, selling antiques. It's his job, the auctioneer, to get as much as possible from the audience or the bidders. And yet naturally the bidders want something as cheap as possible. But they won't find anything, they won't find any bargains if there are other professionals there. But what the auctioneer does to encourage bidders to come out, he inflates the price horrendously. If something is estimated at $200, he might even start off at $3 or $4 even, and see what comes out of the woodwork. Usually, because there's a lot of professionals in there, there's no bidders, and therefore he has to come down. But they do that in the stock market. They can mark it up or down more or less at will if the opportunity is there. And that's what happens. Now this has been marked up, look. Here, it's gone up, look. Blue bar. Look at that low volume. That's why it's come off here. All right, because of that. There's even a signal on this one. No demand, look. So it actually tells you there automatically what I've just told you. It's been marked up, right? Its volume must be low. It's closed in the middle. Same thing happened here. Now these red down bars are the downtrend kicking in. A little bit of lack of supply here. That's why it went up there. But certainly not. Certainly haven't got any principle that's obvious here. Don't do anything in the futures market unless you understand and recognize the principle, because otherwise you're going to lose money. There's nothing more certain than that. You can't trust anybody in the stock market, and you can't trust yourself either, because you can't help absorbing and listening to all this, what they call noise around you. And that noise will inevitably mislead you. What's this, 7 minutes?
Okay, thanks, Tom. Got a request here from, who's that, Rita? from Julius for GLD. So we've got up to date to yesterday on GLD. Actually, the time's gone now. That'll be our final look. So GLD. So we've got end of day on GLD and up to date to yesterday, Tom. So GLD is a derivative for gold.
Now, I don't specialize or follow this usually. Gavin loves gold. Now, the only thing is, I couldn't sleep there about a week ago very well. I got up, right, put the TV on, and in the middle of the night, you get Asian Report. And the commentator was saying how they're advising everybody to move into gold, which I thought was interesting. Safe haven, they kept calling it. So that probably means it's bearish. And that's up somewhere where that arrow was too, by the look of it. So there's a warning to you there, look. Now the reason why that arrow came up, no demand. What we're talking about. You've got obviously, look, it's been marked up, look. Now the reason why you'd expect higher prices there, because lo and behold, you've got a test, look. No supply. And that's why it's gone up, look. But now you've got no demand up here. That red bar looks a weak bar to me. Whenever you see a down bar with a high, higher than the previous bar, and it closes up down like that, it's not usually a healthy sign at all. So I would not definitely be interested in doing anything at all with this stock here at all. Anyway, I'll thank you very, very much for listening. And I'll be doing the newsletter with Rita, typing, either Saturday or Sunday, I'm not sure what day. And we'll try to get that opinion correct. So I'll say goodbye for now.
Okay, thanks, Tom. So bye from Rita and from Peter as well. So have a good weekend, and we'll see you. Yeah, we've done that one, Rita. Rita popped out of the room for a second. Yeah, we'll see you all next week. Don't forget Gavin's on later, so check that out on the VSA Club for the link, and listen to Gavin if you so choose later for the, what's it called, the closing bell. Yeah, I made a mistake one day and called it the final bell, but it's the closing bell. So thankfully it's just the closing bell. So we'll see you all soon. Thanks very much. Bye.